Okay, it's a different looking market. If you are looking at the market now, and if you looked at what was happening for most parts of the morning, we're at the day's high. The surge is extremely evident, clear, 11,412 on the Nifty, and basically about 3 or 4 points away from the day's high. I mean, actually, we made the day high just a couple of minutes back, and it's come off a little bit from there. But this is a spectacular recovery from what the market was doing early on. Mid caps have pulled back up. I mean, on my screen, mid cap index 0.8%, small cap index is up 0.9%. And I think you've got the Bank Nifty, which is up about 0.8% as well. That index at about 29,521. So across the board, there is enthusiasm, which has come back. And at least on the Nifty, I mean, it is once again, I think, the financials more than anything else, which is pulling their weight as a bunch. Let me just quickly actually look at the Nifty 50 stocks and tell you where this is coming from. We should put up Reliance Industries, 1355 on RIL. It's up about 2.25%. So actually, the biggest pull is coming from that one. 26 odd index points coming in just from Reliance Industries. ICICI Bank closely behind with about an 8-point index point push. HDFC Bank and Kotak Bank between them, another 12 odd points. So it's RIL and the three private banks which are contributing pretty much the bulk of what you're seeing out there on the index. 60 points now on the Nifty. With me, my colleague Sumaira. Hi, Sumaira.
Hi, Prashant. And, I'll tell you where a bit of this bump up is coming from as well. European markets have opened on the front foot. So there's about a 0.25% gain across the board over there. So that's something that bodes well. The rise in the US bond yields is something that the European markets are also taking in their stride. Of course, growth concerns are lingering, but I guess to some extent they're being factored in as well. So European markets opening well, and our own market, of course, picking up pace. But first up, let's take you through our top stories. Indian market moves to the day's high. Big moves in Reliance pulls the key indices higher. Mid-cap index outperforms.
The Jet Airways stock extends yesterday's gains after lenders take control. Naresh Goyal steps down as the chairman and exits the company's board. Retains a 24% stake. Brokerages remain cautious.
DLF shares rise on the back of a 3,300 crore rupee QIP with a floor price at 193 rupees a share. India Bulls Housing 2 tops the charts after management say that they are confident of 20% loan growth in FY20.
Technology stocks are the big casualty today. Investors remain cautious as top brokerages expect lower banking business on signs of a slowdown in the developed markets.
And the Congress party releases their minimum income guarantee scheme, promises 72,000 rupees a year to 5 crore of the poorest families. Former Reserve Bank Governor Raghuram Rajan says a farm income scheme is effective only if it targets the poorest of the poor.
Okay, Ashwini is with us to run us through the market and the surge that we're seeing right about now. Ashwini, thanks very much. Afternoon. So at the day's high, and what's your reading?
So the reading is that we are going to close at the day's high, which means another couple of hours worth of rally. But what is very, very, very interesting is that after such a big surge, after 2 days of decline, the market is again off to the races, and people who are short should cover their shorts, otherwise they are going to the cleaners by afternoon, because the stocks which are leading this market are very strong. Private banks, Reliance, overall market breadth is extremely good. So my sense is that I wouldn't be surprised if the rally restarts again. If not restart, at least touch previous highs.
So, I mean, you were saying yesterday when the market was down and out, you should buy. It didn't work out yesterday by close. I mean, the market came up a little bit, but not much. But looking back now, and if, as you're saying, we close with the day's high and build on these gains, Friday and Monday was just a pullback. That's it.
I would think so. Given the ferociousness of the rally, it was very unlikely that all of a sudden it turns around and starts falling. So basically that was a pause, and just the lightening of positions, the way we fell, it was basically weak longs getting thrown out. And now my sense would be that the weak shorts will get thrown out by the end of the day.
Okay, in terms of stocks, Ashwini, what would you trade?
See, Reliance Infra is a buy with a stop of 130, target of 144. Dewan Housing is a buy with a stop of 129, target of 143. And Reliance Industries is a buy with a stop of 1340, target of 1375.
Okay, so one Reliance Infra, one DHFL. Ashwini, going down the quality curve there, or doesn't matter? I mean, these are just trades, right?
See, if you are banking on short covering, the worse the quality, the better it is.
Okay, all right. Thanks very much, Ashwini, for joining us and running us through what you're making of things. DHFL, Reliance Infra and RIL are the three trades Ashwini is putting out at this point, and he's saying that we should end up even higher at the day's highest point. In the meanwhile, from the time that we started, there's basically a 10-point pullback. We were up 60, we're up 50 now on the Nifty. Sumira.
All right, so let's get in some fundamental opinion as well. Earlier this morning, we caught up with Andrew Holland of Avendus Capital Alternate Strategies to talk about, where he thinks the market could be headed, the stocks and sectors that he's focusing on. Hear him out. We'll be back with the managements of a few companies.
My view is that the US is in recession and everything else will follow soon after. That means that yields, as we've seen anyway, will go down, and that will take a risk-off trade, and India will be seen as a safe haven, which is why you've seen so much flows coming back to India. And there's obviously that bit of catch-up as well. So I would expect these flows to continue quite strongly throughout the next 6 months. The RBI in April can easily reduce interest rates by 50 basis points if they have the inclination to do so. So there's your liquidity factor, which is going to be helpful. And then obviously as global yields fall, that's going to be another factor which will help that the RBI in their thinking. And commodity prices will be the next leg. So if I look at that, then both shorter term and the next 6 months should be good for kind of liquidity driven type stocks. I'd still like the IT sector. It's had a good run, it's had a nice pause, and I think it's probably ready for the next upturn going forward, because I do think the rupee is probably slightly overvalued. I think it should be nearer to 70, not 68.
Yeah, the company on our radar now is Mass Financial. That's a stock which is today up about, I think, 1% it's a relatively new listing, and joining in now we have Rahul Gandhi, the chairman and managing director. Mr. Gandhi, good afternoon, sir. Thanks very much for joining in. First, I want to actually talk a little bit about, this whole slowdown worries that we're seeing. I understand that two-wheelers and commercial vehicles are a very small portion of your loan book, but are you seeing any signs of, sort of rural distress or slowdown in financing, etc.? What's the ground situation looking like?
Well, good afternoon. So far as the ground realities is concerned, that this demand is there, already there. And what has happened during the last 2 quarters is there is some bit of a liquidity crunch in the market. So for getting the funding is become a bit difficult, but that is available to the companies like us, and the cost of borrowing has increased bit much. But demand is there, and portfolio for MEL, SME, two-wheeler and commercial vehicle in which we have been working, we don't see that there is a shrink in demand.
Okay. What about the other segments? That's, I think you have MSME and also micro enterprises, right? What are you noticing over there? And also a small portion of that is, you have a LAP portfolio as well, right? So if you could give us a sense of, how demand is, how things are shaping up.
So far as the MEL portfolio is concerned, that is a majority portfolio in our book, MEL and SME. And this particular portfolio is growing at a rate of 25 to 30%. And overall market demand is there because we are basically working into the class of the customers whom they are underserved or unserved class of the customers. So with understanding their business very deeply, indulging with their own business requirement, we are in a position to get better business opportunities in this particular class of the customers as well, because there are overall 5 crore registered SME, and the majority of the people's their demand is not being satisfied. So there is a huge gap between the demand and supply. Plus the economy is growing at a rate of, even say 6 or 7%, then there will be the further rise in demand of all this class of the customers.
Right. So in these segments, within these segments, I mean, we've had reports of talking about how the Mudra loans, right? I mean, the disbursement done over the years through the Mudra loan scheme is showing up large amounts of non-performing loans, and I mean the fear is that actually eventually the amount of NPLs in that segment may be very high. These segments for you also are growing very fast, but I would imagine that, and since the micro enterprise segment is the flagship segment for you, can't we look at what is happening to the Mudra loans to what is happening to your segment? I mean, how you make these loans, the processes you follow, etc., would be different, but essentially the target segment is the same, right?
Yeah, market is the same, but the very important thing is that how you approach to the market, that is very important. How you create the portfolio, that is very important, because in informal class of customers, your credit screen plays very, very important role, and it should be the touch-based credit, and you have to be very indulgent with the borrower, and you have to create the successful borrower out of them. And for that, your close monitoring and watch and your credit screen plays a very, very important role.
So you're not seeing any issues there. I mean, both is there, but you're not seeing any issues with regards to asset quality in these two segments.
No, particularly so far our company is concerned, we have been in a position to maintain the NPA around 1%.
Just to come back to two-wheelers, again, you said that you're not seeing any slowdown at all. We've heard from some of the biggest two-wheeler makers that inventory levels at dealerships is now, in some cases, between 70 and 100 days. It is double of what it usually is. I mean, actually more than double in some cases. So could you just explain to us how it could be that OEMs, the manufacturers, are saying, well, there is a serious slowdown, and in terms of credit offtake for that segment, you aren't seeing any impact?
So it has slowed down, and so far as the OEM is concerned, they are dumping the goods to their dealer. That is a fact of the life. But our two-wheeler portfolio is not that big portfolio, and given the portfolio size of this two-wheeler, we are in a position to take the growth of 20-25% because we have been working in the remote rural area and our base is very small.
Okay. So just one final question. You said cost of borrowing has gone up. Could you give us a sense of, what it's trending at and how it would compare to the previous quarter?
Yeah. Earlier, our cost of borrowing was around 9%. Now it has gone up by 50 basis point to 75 basis point.
All right, Mr. Gandhi, we'll leave it at that, sir. Thanks very much. Do enjoy your conference, and we'll touch base with you in perhaps later in the quarter. So that's the management of Mass Financial. So basically, the slowdown is quite evident. That's what Mr. Gandhi said. But given that their portfolio book itself, of the auto space is quite limited, therefore, they're not seeing as big a dent as perhaps some of the bigger players. But with that, let's shift focus to a CNBC-TV18 exclusive. Former Governor of the Reserve Bank, Raghuram Rajan, says that he is doubtful that India is growing at 7% given the lack of jobs. Speaking to my colleague Lata, he adds that clouds over GDP need to be cleared by appointing eminent economists to oversee the data.
Right now, some rating agency has marked down India's FY20 growth rate to below 7%, to 6.8. What's your own sense of the current India growth story over the next couple of years?
Look, I'm in the camp that I have no idea what the statistics are at this point. We've moved them up, down, we've changed them. I think what we need is a revamp to really figure out, what our true growth rate is. Certainly, I know one minister said, how can we be growing at 7% and not have jobs? Well, one possibility is we're not growing at 7%. But really, I think the kind of demand coming from out there that seems to, at least at this point, anecdotal, but we'll know from the elections, is that we need economic growth that reaches us. That we need stronger sort of broad-based growth, which primarily for most people means good jobs. Okay. And what we need to do is focus on that. How do we create good jobs for the vast number of people who are leaving schools, who are leaving agriculture, who are leaving universities, in such a way that they can expand India's growth? A lot of people have said the population dividend should not become a population curse. This is the time when we need to make sure that that, in fact, doesn't happen.
Okay. If I can get a one-line answer from you, are you worried about the Indian Statistical Organization and the data put out?
Look, I'm not worried. I just think we need now to essentially clean up, find out what, in fact, is the source of confusion with the new GDP numbers, with the revisions, etc. And I would say setting up an impartial body to look at it is an important step to restoring confidence. And it may well be that that body pronounces do thus and such to rebuild confidence. But we absolutely need better confidence in our GDP numbers now, given the back and forth that we've had.
So we started at 130 with about a 55-point gain. We're up 45, 46 odd points. So, I mean, it's actually a vast improvement than as compared to the first couple of hours of trade that we saw today. Congress President Rahul Gandhi unveiled the party's minimum income guarantee scheme, promising 72,000 rupees per year for 20% of the poorest families in India. This was yesterday. There have been lots of questions raised about how this would work. And of course, the costs and how will it be actually funded. How does this fit in the context of the budget in India and, of course, concerns about the fiscal deficit? Lata Venkatesh is joining in with the economics behind the scheme. Lata.
Well, all we know is that the cost at its peak, as the Congress speech said, is 3.6 lakh crore, which is 72,000 into 5 crore. But beyond that, we don't have any details. When we asked Congress spokespersons, they said, which manifesto gives you the budget breakdown? When we come to it, we'll tell you what the details are. But it looks like it is going to be something which will also be shared by the states, because the spokesman definitely said that the total expenditure of all governments in India, state plus centre, is 60 lakh crore. So at its peak at 3.6 lakh crore, it's coming up to just about 5% of the entire expenditure of states plus centre. So probably states will be roped in. Will the MNREGS be worked into it and the food subsidy be worked into it? We do not know those details just yet. But there is only one way to target, and that is there is a socio-economic caste census of 2011, which basically asks every citizen, is anyone in your family earning more than 5,000 rupees? Then you don't fall in that category. So that kind of census has been done, but that is 2011 census, already 8 years old. If the party were to come to power, then clearly groundwork will have to be done again, and you will have to have the cooperation of the states, because they will have to provide the data. Now, just a quick comparison between the Congress and the BJP current farm income transfer. This is an income transfer. It's not a farm income transfer, the Congress scheme. So Congress scheme applies to just the bottom 20%, rural and urban. The BJP scheme applied only rural. The BJP scheme applies to landed. So it's not really the poorest. Whereas this, since it applies to the poorest, will obviously be landless and maybe people who are sharecroppers or tenancy farmers. That is the difference. And of course, the amount. This is 72,000 crores for 12 crore families because it is landed, and therefore it comes to about 500 rupees a month. Whereas this comes to, much more, 6,000 rupees per month, but for a smaller number of families, only 5 crore families. That's all we know by way of math. Much will depend on exactly what is subsumed, what is the state centre share, and how long you will take to find out the targets. At the moment, the market is therefore not reacting as to the fiscal deficit impact because it's really so far away.
Lata, thanks very much. And of course, I think as the Congress spokesperson was explaining earlier, that this is also essentially going to be put into practice in a phased manner. So the cost in year one will be different. And of course, by the time it's fully implemented, I guess the cost is what Lata pointed out earlier. Well, it's a wrap here on this edition of Midcap Radar. The market is up 52 odd points. Thank you very much for staying with us. On the other side, the mutual fund corner coming up with Sumaira.